Canada's housing crisis has been fueled by record-breaking population growth. But what happens when that growth suddenly stops? Because population growth just hit its lowest level since 2019. Non-permanent residents are leaving faster than they're arriving, and we're staring down 2 straight years of projected negative growth. And yet we're still building a record number of rental units. In today's breakdown, we're going to uncover how this shift could impact rental prices, home values, and ultimately your real estate decisions in 2025 and beyond. Real quick, if we haven't met, my name is Richard. I'm a Canadian real estate agent and I'm passionate about helping you understand what's actually going on in the housing market. This channel is all about breaking down Canadian real estate in a way that actually makes sense. So if that's something that you want to stay on top of, just hit the like and subscribe button so you don't miss out on next month's report. Before we jump into the numbers, let's just take a step back real quick. Why does population growth matter so much for housing in Canada? Over the past decade, Canada's economy and especially its housing market has been driven by rapid population growth. We've added over 4 million people between 2016 and 2023, mostly in major metro areas. That massive influx increased demand for homes, pushed rents up, and contributed to price surges across nearly every province. So now that population growth is slowing and possibly going negative, it changes the entire equation for housing demand. And that's what we're seeing. Population growth is slowing big time. Canada's population grew by just 0.15% last quarter, the lowest non-COVID quarter since 2017. Our annual growth rate is now 1.8%, the first time it's dipped below 2% since 2022. That might not sound alarming at first, but this is a country whose entire housing and labor strategy has been built on rapid growth. When we look at province by province, Alberta remains the standout. It leads the country with 3.5% growth, and this is mainly to do with people moving from other provinces. Because when it comes to population, Alberta just isn't growing, it's booming. Buyers that have been priced out of Vancouver or Toronto are flocking to Calgary and Edmonton, where homes are still relatively affordable. We're seeing strong demand, rising wages, and steady job growth there. It's not surprising Alberta is leading the country. It could remain the most resilient housing market in Canada this year. And now moving on to non-permanent residents, which is taking a big hit right now. The slowdown is mainly driven by a sharp drop in non-permanent residents. Last quarter, the NPRs declined the first time in 3 years, the biggest drop since Q3 of 2020. If not for a spike in asylum claimants, the numbers would have been much worse. The government has clearly been cracking down on temporary permits. In fact, Ottawa is projecting a total decline of 850,000 NPRs over the next 2 years, bringing their share of the population back to 5%. If that happens, we will see 2 straight years of negative headline population growth, something that hasn't happened in decades. This matters because the NPRs are a major driver in rental demand. If they disappear, vacancy rates could climb fast. Now here's the kicker. We are still building a record number of rentals. As of right now, there's 147,000 purpose-built rentals that are under construction. That's roughly 6% of Canada's total rental stock. And it's even more extreme in certain regions. Atlantic Canada has rentals under construction equal to 13% of existing supply, but population growth there just hit zero last quarter. If those units do get completed in a softening market, we could see incentives, vacancy increases, and rent declines in some cities. And if we zoom out just a little bit, we can see that the overall housing starts are down 19% year over year. In Toronto, starts are down 68%. In Vancouver, it's 47%. What's interesting is that now over half of all new starts in January were rentals, which we haven't seen in decades. It's not private developers driving this, it's government-backed financing. When you remove that, we are looking at the weakest building activity since 2008-9 recession. This brings me to another detail, which is just the risk to construction jobs, because this trend also affects employment. Construction still makes up about 8% of all jobs in Canada, but for the first time since 2015, the number of dwellings under construction is now declining year over year. And so if that does continue, it could impact wages, trade employment, and even local economies tied to the building industry. We've talked about a bunch of facts here and just expected projections, so let's break it all down into practical advice. For renters, especially in oversupplied areas like the Atlantic Canada or just outer edges of Toronto, there may be some relief on the horizon. With more rental units hitting the market and population growth slowing, we could see increased vacancy and more incentives from landlords. It's a good time to explore your options and negotiate where possible. For single-family home buyers in major markets like Vancouver and Toronto, new construction has slowed noticeably. While there's some inventory available right now, future supply could tighten again if demand picks up later this year. But with all this uncertainty, it's hard to say what's gonna happen. So at this time, what I can say is just stay informed on your local market. And being financially prepared will go a long way when the right opportunity comes up. For condo buyers or investors, short-term conditions may remain soft as existing inventory works through the system. That said, long-term projections point to an undersupplied condo market by the end of the decade in many major cities. This may create opportunities for those with longer investment horizons or flexible timelines. Like I mentioned in the beginning, population growth has been the fuel behind Canadian housing for years. And now that engine seems to be slowing. If you understand where the supply is building and where demand is shrinking, you can navigate 2025 with confidence in strategy. And truly, this is the kind of insight that could save you thousands in your next move. Though what I'll always say is that the real estate market is constantly evolving. And the key to making smart decisions is staying informed and understanding the data. If you found this update helpful, give it a like and subscribe so you don't miss out on next month's report. And if you want to see what's happening with the real estate prices in the major Canadian cities, where I break down current trends that are still shaping the market today, I'm going to link that video right here. And while you watch that, I'm going to go fly some drones.